Yes, good evening, all of you. The topic for this session is compliance and reporting in tax audit report. Friends, every tax auditor should definitely go through two publications apart from others. The first publication which a tax auditor should go through is a publication released by the Taxation Audits Quality Review Board. The publication was released in June 2022 and the title of the publication is Study on Compliances in Reporting in Tax Audit Report. Now, another publication which the tax auditor should definitely go through among other publications before conducting his tax audit is Guidance Note on Tax Audit under Section 44AB of the Income Tax Act. What I am displaying on screen is the publication relevant to assessment year 2022-23, but this publication will be released each and every year. Let's say in 2023, the publication will be released. Already draft was released and the last date for comments is 7th of August 2023. We may expect the final guidance note anytime in the coming 10 days or maybe within a week time. We can expect the release of the guidance note for assessment year 2023-24. Friends, the guidance notes are released by the institute to provide guidance to members. Certain matters may arise in the course of their professional work and they may seek certain assistance from the institute. So these clarifications will be provided by the institute through guidance note. Guidance notes are recommendatory in nature. For instance, if any guidance note contain a matter relating to the audit matter, then the member of the institute should follow that guidance given unless otherwise he is satisfied that in the circumstances of the case, it will not be necessary for him to do so. In a case where a guidance note contains anything relating to an accounting matter, the accounting and financial statements are to be prepared by the client or the entity. Now, what the auditor has to do, he has to issue a report on those financial statements, right? So, in case where a guidance note contain anything about an accounting matter, the member should consider it while carrying out his audit, whether the financial statements are prepared in accordance with the guidance given in that guidance note in respect of that matter. Now, if it is not so, the member should consider whether he has to make a disclosure regarding this matter in his audit report, if necessary. Friends, you all know that the tax audit under Section 44AB was introduced from the assessment year 1985-86 onwards. The objective for which this tax audit was introduced in the statute book, the then finance minister in the budget speech specified that this section 44AB is brought about with the objective to ensure that the assessees maintain proper books of accounts and other records. Now, such books of accounts and records will enable to disclose the true income of the taxpayer. Now, if this routine checking that whether books are maintained, whether the books reflect the true income of the taxpayer, etc., it has been examined by a chartered accountant and if a report has been issued, then what will happen is the assessing officer will be left with a good time, which will be utilized for the purpose of other tax administration work. Right? So this is the objective for which section 44AB was introduced in the statute book. Now, this responsibility of conducting the tax audit and issuing the tax audit report under section 44AB was entrusted to chartered accountants. So it is the responsibility of the Institute of Chartered Accountants of India to ensure that the tax audit reports issued by its members adhere to certain quality standards. So for the purpose of ensuring the quality of the tax audit reports issued by the chartered accountants, the Institute of Chartered Accountants of India has taken up certain measures. One such measure is publication of a guidance note. So right from 1985-86 or right from the year 84-85 when the tax audit was introduced, the institute started issuing or publications of tax audit reports have been started. Later on, it has been revised. So each and every year, the guidance note got a revision. Now, the latest revised edition available is of the year 2022, and the draft revised report for the year 2023 was also released. Now, in a short while, we will be expecting the final guidance note relating to the assessment year 2023-24. Apart from issuing the guidance note from time to time for the ensuring the proper conduct of audit or guiding the members for doing quality tax audit, a tax audit quality review board was set up in the year 2018. Now, this taxation audits quality review board will review the various tax audit reports issued by its members. That is the members of the Institute of Chartered Accountants of India. They came out with a publication in the year 2022 called Study on Compliances in Reporting in Tax Audit. Right. Apart from this, the institute also has released various checklists which will assist the auditor to do proper tax audit work. And also, the unique documentation identification number was also introduced to ensure that the fake tax audit reports are not filed by those persons who are not the members of the ICAI. So these are the various measures taken up by ICAI to ensure the quality of the tax audit reports. Now, what is the scope of the TAQRB, Taxation Audits Quality Review Board? What is its scope? The scope of the Taxation Audits Quality Review Board is to ensure compliance with the requirements prescribed under various sections of the Income Tax Act. It will also ensure that the compliance is made with regard to reporting requirements prescribed under various indirect taxes laws, including the GST, etc. And also, it will examine the compliance with the various technical guidance notes, and also various pronouncements made by the Institute of Chartered Accountants of India. Now, how does this TAQRB select the reports for review? Now, the members of the institute, those who are in practice, will issue the tax audit reports by uploading it in the income tax department site, or they may upload the various reports under the GST laws in the GST portal. Now, these reports which have been issued by the chartered accountants in respect of tax audit reports or reports under the Income Tax Act or reports on the indirect tax laws, so motive. So randomly it may pick up the reports, or where any reference is made by CBDT or CBIC or C&AG. If they refer certain reports to be reviewed by TAQRB, those reports also will be reviewed by TAQRB. Now, not only that, where any serious reports have been published in the media with regard to certain irregularities which have been committed by certain entities. So those reports or those tax audit reports relating to those entities will also be picked up by TAQRB, and they will review the reports. If on reviewing the reports by TAQRB, if the Taxation Audit Quality Review Board finds that the reports contain any material non-compliances, in such a case, the TAQRB has the authority to refer that case to the Director Discipline. So friends, this is the introductory part, which the speaker tried to impress upon that it is not that nobody is examining or reviewing our reports. Apart from the reports issued by the tax auditor will not only be referred by the assessment authorities, but also there is an authority or a board within our institute constituted for the purpose of review of the reports issued by the members, whether the members are complying with the standards and other material issued by the chartered accountants, and also whether the compliance of various laws of direct and indirect taxes have been made by the members or not. If any serious non-compliances are found, those cases will be referred to the Director Discipline. Now, whenever a tax auditor conducts his audit, he should ensure that the financial statements which he is going to audit comply with the accounting standards issued by the ICAI. Some are of the opinion that for non-corporate entities, accounting standards are not applicable. It is not like that. From 2021 onwards, the accounting standards are made mandatory and applicable to non-corporate entities also. For that purpose, non-corporate entities are classified as class level 1, level 2, level 3, level 4 entities. For level 1 entities, all accounting standards are applicable, and there are certain exemptions or relaxations in disclosure requirements in respect of level 2, level 3, level 4 entities. So one should understand that the financial statements which the tax auditor is going to audit upon complies with the accounting standards issued by the ICAI, and not only that, the financial statements are prepared within the framework for preparation and presentation of financial statements issued by ICAI. And whenever a chartered accountant in practice is conducting any type of attest function, it is of the paramount importance that the auditor or the chartered accountant conducting the attest function applies the standards on auditing issued by the ICAI in conduct of his audit or attest function. Now, let us go into the observations made by the Taxation Audits Quality Review Board. Friends, the Taxation Audits Quality Review Board has reviewed various tax audit reports issued by the members and found out that in certain clauses of the 3CA, 3CB, 3CD, certain deficiencies or non-compliances have been found. It is not that such deficiency or non-compliance is found out in all the cases which have been reviewed. So let us take the example of clause 2 in form 3CD. There is certain non-compliance. That non-compliance the TAQRB may have found in many cases, or let us say, for example, in the case of clause 8, it may found out that it may have found out that such non-compliance is committed in a few cases. Or let us take the example of clause 22. In clause 22, the non-compliance which have been brought out to the notice in the publication may be committed by some cases, or maybe in respect of any other clause. Such non-compliance they might have come across in certain cases. So it is not that whatever non-compliances we are going to discuss now are committed by all the people. In certain cases, many instances, certain few, certain some, certain cases. So friends, let us go into the observation of TAQRB in respect of form number 3CA, 3CB. As impressed upon in our earlier discussion, it is the responsibility of the tax auditor to ensure that he follows the standards on auditing during the course of conduct of his tax audit. Friends, SA 700 deals with the audit report issued by the issued by any chartered accountant in respect of any report he issues. Now, as per SA 700, the audit report of any entity should contain definitely two paragraphs. One is the auditor's responsibility, the other one is the auditee's responsibility. If it happens to be tax audit, it will be the SSC's responsibility and the tax auditor responsibility. What TAQRB has found out that this SSC responsibility and the tax auditor responsibility paragraphs which are required to be included in the audit report as per SA 700 is missing. Or some people what they are doing is they are typewriting it, scanning it and attaching it as a part of notes to the report when they upload the tax audit report in the CPC website. Now what TAQRB states is it should not be done like that. Now what is this SSC's responsibility statement and what is this tax auditor responsibility statement? In the guidance note, it has been specifically mentioned that as per SCS 700, you have to definitely include these paragraphs in your audit report, right? Now, you can't change the or you can't change the format as given in the utility of the income tax department. Therefore, what the guidance note suggests is that you have to include this item in clause 3 of form 3CA or clause 5 of form 3CB. You have to include there. Now, what is this format of the SSC's responsibility? It has been provided. You may copy this and paste by making appropriate changes. Here you got the tax auditor's responsibility. Now, these responsibility statements should be included in your form 3CA or 3CB. Otherwise, it will be deemed that there is some non-compliances are part of the tax auditor. Now, what is this clause 3 of form 3CA? The clause 3 of form 3CA is let it populate. Right. This is the clause 3. Now, in the utility, the CPC utility, you have this clause 3 and you have to add details, and here you have to give it as a qualification others, and you have to fill it in this observation or qualifications box. There you have to fill that responsibility statement. This is 3CA. As far as 3CB is concerned, you have to give this in the clause 5. You have to add details and the qualification type should be others and the observation or qualification should be populated in this box, right? Now, moving forward, We're going to the observations of TAQRB in form number 3CD. In form 3CD, there is a clause 2. Now, what does clause 2 state? As per clause 2, the address of the SSE should be given. As per clause 2, the address of the SSE should be given. The address of the SSE should be given as per clause 2. Now, what is the observation of TAQRB in respect of clause 2? TAQRB states that whatever address, now let us get one point cleared, that is, the audit report is in form 3CA for those SSEs who are required to get their books of accounts audited under any law for time being in force. The audit report should be given in form number 3CB in respect of an SSE who is not covered by the earlier provision. That is, those who are not required to give report in CA, they have to give report in CB. All the SSEs should give the additional particulars as per form 3CD. It is the responsibility of the SSE to fill the details of particulars in form 3CD. The auditor's responsibility is to verify the details filled in by the SSE and give his report. But generally, in most cases, if not all cases, the form 3CD is also filled by the tax auditor by taking the information from the books of accounts, records, and from inquiries made from the SSE. So here, TAQRB observed that the address given in clause 2 of form 3CD is not matching with the address in the annual report of the entity. The annual report containing the profit and loss account, balance sheet, notes on accounts, etc. will be uploaded along with the uploading of this utility of form 3CA, 3CD or 3CB, 3CD. Now, in the annual report, the address as given to the registry, Ministry of Corporate Affairs, that is, the address registered with ROC is mentioned in the annual report, but in clause 2, some other address is mentioned. It should not be like that. Now, what address is to be mentioned? Now, as per the guidance note, the tax auditor has to ensure that in clause 2, the address as communicated to the income tax department is to be mentioned. How can you know the address communicated to the income tax department? You may refer to the profile section of the SSE in the SSE's CPC login. If it is a company, the address should be one which is registered with the Register of Companies. Now, if it happens to be an entity having more than one place of business, then you have to mention the principal place of business. So, friends, the whatever address is to mention, the guidance has been given in the guidance note. You may refer and give it. And especially in respect of companies, the address is to be one which is registered with the Registrar of Companies. Coming to clause 4. As per clause 4, what is to be reported? In clause 4, the tax auditor or the SSE has to report the applicability of various indirect tax laws. The applicability of various indirect tax laws. First of all, you have to mention if it is applicable, yes or no. If it is applicable, then you have to select the type of the indirect tax and give the registration number. Now, this is clause 4. Now, what does TAQRB observed? TAQRB observed that in the attached annual report and the CARO reporting, let us say there are 10 types of indirect taxes which are applicable to this entity. But what has happened is not all these applicable indirect taxes mentioned in the CARO report have been mentioned in class 4. Here only 4 are mentioned. This is one mistake that has been found out by TAQRB. The other mistake is in certain indirect taxes or for indirect taxes, you will have a registration number. That registration number is also PAN based. Now, what happened is the PAN based registration number of indirect taxes, in that the PAN number is not matching with the PAN number mentioned in form number 3CD. Those PAN numbers are not matching. If the PAN numbers are not matching, you have to report in form number 3CA and or form number 3CB, which has not been done. Right? So you have to ensure, particularly in respect of company SSAs, under CARO reporting, what are all the indirect taxes that are mentioned? Make sure that those indirect taxes are definitely mentioned in clause 4. Ensure that if indirect tax loss registration number is PAN based, that the PAN number, that registration number is properly populated or not, you have to ensure. Now coming to clause 8, the requirement of clause 8 is that the relevant section under which the audit is conducted should be mentioned. The relevant section or the relevant clause under which the audit is carried out should be mentioned. So friends, this is very, very important. Now let us go to the guidance note in this regard. The audit may be conducted under various subclauses of 44AB. There is 44AB A, B, C, D, E. So you have to check under which subsection of 44AB you are going to conduct the audit. Let us say you are where the threshold limit exceeds 1 crore. There you have to mention 44AB A. Suppose there is a provision to 44AB A, that is where 5% those limits are there. Then the threshold limit of 1 crore becomes 10 crores. But the most important point one should understand is that there is a third provision. There is a third provision to section 44AB. What does that third section to 44AB state? It states that if any person is required to get the books of accounts undated under any other law, then he need not again get his books of accounts under 44AB. He can simply attach that audit report and he should attach the additional particulars as required under form number 3CD. So friends, in respect of a company or any other entity which is required to get its books of accounts under any other law for time being in force, maybe a trust which may be required to get its books of account audited under Trust Act, a company required to get its books of accounts audited under the Company Act. In respect of those SSCs, you should not select 44ABA. You should select the third provision to section 44AB in the drop down list. You should select third proviso to section 44AB in the drop down list, but you should not select clause A. That is the point which is to be kept in mind. Moving forward, clause 10. What does clause 10 require the SSE to mention? The clause 10 should mention the nature of business carried on by the SSE. Nature of business carried on by the SSE. Not only that, clause 10 requires the SSE to mention where more than one business is carried on, then nature of every business should be mentioned. First of all, one should select the main sector. Let us say wholesale trading or wholesale and retail trading. Next, select the subsector. Is it wholesale or retail? Or first select the main sector, manufacturing. In that manufacturing, you have to select the subsector. Once you select the sector and subsector, the code will automatically get populated. Now, what does TAQRB found out? TAQRB found out that all the main lines of businesses are not mentioned, but they could have found out all the main lines of business in the annual report. They could find all the main lines of business in the annual report. So ensure that the principal lines of business of all businesses are mentioned in clause 10. So friends, the crux of the matter is that whenever there is something written in the financial statements or annual reports which you are going to attach while uploading the tax audit report, the information, ensure that the information in the utility which you are going to fill and the information in the attachments which you are going to upload, both of them matches. That is of paramount importance. Coming to clause number 11. Now, clause number 11 requires the SSE to mention if any books of accounts are prescribed under section 44AB. Any books of accounts are prescribed under section 44AA. Friends, books of accounts are prescribed under 44AA only for notified professions. Read with rule number 6F of the income tax rules. But what the mistake has been committed here is, in respect of company SSE, who is not carrying the notified profession, some are selecting yes here. Should not be like that, because no specific books are mentioned required to be maintained under section 44AA in respect of an entity carrying on business or profession other than notified profession. So for company SSEs, you should not select yes here. That is point number 1. Point number 2. In clause 11B, subclause B, the SSE is required to list the books of accounts maintained. That is question number 1. Question number 2 is you have to give the address. Question number 3 is if you are maintaining the books in a computerized system, you have to mention the fact. That is question number 3. Question number 4. If you are maintaining books at more than one location, you have to give the address of all such locations and at each location what you are maintaining. So in clause number 11, subclause B, you have to answer 4 questions. It is not one question. Now, coming to the list of books of accounts maintained. It is not that it is enough if you write a day book, ledger, bill book, bank statements, maybe 1 or 2. It is not like that. You have to mention all the books of accounts which are being maintained. Books of accounts means it also include records. It also includes various other documents. So not only day book, not only ledger, not only bill book, not only bank statement, but you may have also to mention debit notes, credit notes, factory gate register, stock register, invoices, all those items which you have examined for the purpose of arriving at the opinion should be mentioned. That you should understand. If books are maintained in computerized system, you have to mention that. You have to give the address of the location where books of accounts are maintained. So, friends, this is some of the deficiencies which have been found out in clause 11. Now, I recommend all of you to refer to the guidance note also, wherein we will get the guidance in respect of the matters that are to be included in the tax audit report. Now, coming to clause number 11 or clause number 13. What does clause number 13 require the SSC to furnish? Clause number 13, let us go to subclause D. Subclause D, subclause E, subclause F. So, what is D, what is E, and what is F? Mistakes are committed here. If any adjustment is required as per ICDS, then here you have to select yes, because the financial statements are prepared in accordance with the accounting standards. The income computation is to be made in accordance with the ICDS. Now, where the financial statements are as per accounting standards, and by applying ICDS, if any adjustment is required to the net profit to arrive at the income as per the Income Tax Act, you have to mention here. If there is a difference, you have to select yes here. Thereby, E will be activated. In U, you have to select the ICDS number. You have to mention the amount by which the income will be increased or decreased, and you should write the net effect here. Now, what some are doing is, even though this adjustment is required, here they are selecting no. If they select no, what will happen is this won't get highlighted. Then what they are doing, they are writing such differences in clause F. Here they are writing. Now this is not a proper practice. If the income adjustment is necessary by applying ICDS, first you select yes in the column. Thereafter you give the effect in E, and in F, what you have to mention is for each and every ICDS, the disclosure requirements should be given in the disclosure column. But TAQRB found out that most of the people are not filling the subclass yes. They are leaving it as a blank. Or some of the people are filling this clause F, subclause F, if there requires an adjustment in the income by application of ICDS. This should not be done. Right? Now, moving forward, let us go to clause number 14. What does clause number 14 require the auditor to mention, or for that matter, SSE, what he has to report in the clause number 14 of form number 3CD? In clause number 14, the SSE has to mention the method of valuation of closing stock. The SSE has to mention the method of valuation of closing stock. In clause number B, if there is any deviation in the method, as per section 145, you have to mention. Now, let us understand clearly that the stock appears in the financial statements. Financial statements are required to be prepared in accordance with the accounting standards. As per AS2, exclusive method is to be adopted. Right? As per income tax ICDS standard 2, inclusive method is to be adopted. So friends, here 2 points are to be kept in mind. In clause A, they are asking the valuation of closing stock. In clause B, they are asking the variation as given as compared to section 145A requirement. Section 145A, in that section, the term used is inventories. The term used is inventories. But here they are asking closing stock. Here they are referring 145A. 145A refers to inventories. Now, what our guidance note state is, closing stock means only finished goods and raw material. Now, what our guidance note state is, here also you should take or you should mention inventories. So, you have to give the method of valuation of all inventories, both finished goods, raw materials, stores, spares, consumables, etc. Work in progress. All types of inventories, you have to give the method of valuation. Right? That is first point. Now, second point. Most of the people are selecting no here. They are stating that there is no variation. Now, also what people are doing is, in clause number 14, they are giving the method of valuation as per ICDS. It is wrong. You should not give the method of valuation as per ICDS. You should give the method of valuation as per accounting standards. Because financial statements are to be prepared by following accounting standards. Right? That you should understand. Now, when the financial statements are prepared by using accounting standards, there the value of the method of valuation of inventories is exclusive method. But as per ICDS, the method of valuation is inclusive method. So for everyone, the answer should be here yes. Now, if the answer is yes, you have to give the particulars of effect on profit or loss. Friends, even though exclusive method is adopted as per accounting standards and inclusive method is adopted for ICDS, in the institute guidance note, you can find out that in the both methods, if a particular procedure is followed, then it will be revenue neutral. Means there will not be any effect on the profit or loss by adopting either of the methods. For that, you have to write a paragraph in clause 3 of form 3CA and clause 5 of clause 3C. B. And here you will mention yes, and you will mention the effect on profit or loss as 0. Okay, this is as far as clause number 14 is concerned, right? So what are the observations of TAQRB? Now what they are doing is each item of inventory you have to mention. The valuation as per AS2 should be exclusive method. This should be exclusive method. 145A it is inclusive method, and what people are doing, people are reporting the valuation as per ICDS. It should not be like that. They should report as per AS2 or for that matter in AS. Now let's move on to clause number. Let's move on to clause number 17. What does clause number 17 require? Clause number 17 require the SSE to mention where land or building is acquired and the transaction price is less than the price of the stamp duty value. So the transaction price, if it is less than the stamp duty value, you have to fill clause number 17. But what most of the people are doing, even though both the values are one and the same, they are reporting here. You should not do like that. If both the values are same, don't report. When you have to report only when the transaction value is less than the stamp duty value. Then only you have to report. Now coming to clause number 18. In clause number 18, what is happening is in 18, what is to be reported? 18 is in relation to the particulars of depreciation which is to be allowed. Now here, certain types of mistakes are being committed. Not all the additions or deletions as available in the annual report are mentioned here. Not all the additions or deletions as mentioned in the annual report are mentioned here. Now, if such is the case, if there is a difference, first of all, the tax auditor has to prepare a reconciliation statement and keep it with him. Next, here in the particulars of depreciation, one has to give the effect of adjustment in respect of change in rate of exchange. What TAQRB has found is this effect on change in exchange rate is reported in the annual report, but it is not reported in the e-filing utility. That is one of the mistakes that has been found out. Now the second one is here they have to mention the date of purchase and the date to use of the assets acquired or assets disposed of during the year. Now for assets acquired, they have to give the date of purchase, date to use. Now to their surprise, they found out that for all the additions, the date of purchase and date put to use both are same. It can't be like that in respect of all the assets. If for some assets, date of purchase and date put to use may be the same. But let us say you have acquired a plant and machinery. The date of purchase may be today. Now that plant and machinery requires installation which will take 10 days. Then date put to use will be a different date. But they have found out that in almost all cases, date of purchase and date put to use are one and the same, which can't be the same in respect of all types of assets. One thing that they have found out. The next thing is that what some are doing is, let us say, during half year one, some 10 assets are purchased. Now they are writing a single line item on 30th September. They are aggregating all and writing the same date for acquisition or for disposal. In half year two, what they are doing is they are writing this as 31st March. Single date, single line item, they are writing the summary figures. Now, what they are saying is it should not be done like that. You have to mention it separately. Now, coming to clause number 19. What is to be reported in clause number 19? In clause number 19, we have to mention what are the admissible deductions under so and so sections like 32 ACAD. What you have to do? You have to mention the amount debited to profit and loss account, amount debited to profit and loss account, and also the amount admissible. You have to write here. Now here, it may happen in certain cases that as per the accounting principles, that amount is not debited to profit and loss account. Then what you have to do? If the amount is not debited to profit and loss account, you write here amount debited to profit and loss account as 0. Now, if 10 lakhs is admissible as a deduction, you write here 10 lakhs. That is first point. Second point is, in respect of certain clauses, if you want to claim deduction, you should obtain a separate audit report for that. Now, there may be a section 35D, or let us say any section 35, 33 ABA. Let us suppose, in respect of that section, in order to claim the deduction, you have to get a separate audit report apart from section 44 AB audit report. Now, if such audit report has been obtained to claim the deduction, then you have to refer that separate audit report in form number 3CA or in form number 3CB. You have to mention in clause 3 of 3CA or clause 5 of 3CB. That you should understand. Now, coming to clause number 20. In clause number 20, what should the tax auditor or the SSC mention? Now here, going to clause number subclause B. In subclause B, what you have to do is, you have to mention the contribution received from the employees for various funds. Now, what are the details to be given? Generally, welfare funds of the employees, generally we may refer to ESI, PF. ESI, PF, we may refer to these two funds. Now, what does TAQRB found out? TAQRB found out that most of the people are writing PF details, right? But they are not populating ESI details. Now, how could TAQRB find out that ESI is also applicable to this entity? They found out from the annual report. They found out from the annual report that ESI is applicable to this person. The ESI contribution was also there. Payment to ESI was also there. But they did not populate the figures in clause number 20. Now, one should ensure that if both ESI, PF are applicable to the entity, both the details are to be given here. That is point number 1. The second non-compliance is what they have found out is the date of payment they are populating it correctly, but the date of payment to the authorities here wrong date is recorded. Here wrong date is recorded. So a tax auditor should ensure that the due dates are the actual payment, due date, due date they are wrongly populating, the actual date they are giving correctly. Now here, the actual date, it will be appearing on the payment challan. So what they might be afraid, if the payment is made after due date, the amount may be disallowed. So what they have found out is some people are not mentioning the due date for payment correctly. Now we have to ensure that the ESI details are also populated and the due date for payment is correctly mentioned in the e-filing utility. That we should understand. Okay, now moving forward, let us go to clause number 21, subclause A. Expenditure incurred at clubs being entrance fees and subscription. Now, what does clause number 21A require the tax auditor to mention? Clause number 21A requires the tax auditor to mention in respect of certain amounts. Now, here, the expenditure incurred at clubs being entrance fees should be reported separately, and the expenditure incurred at clubs for club services should be mentioned separately. But what some are doing is they are clubbing both the amounts. It should not be like that. That is point number one. Point number two is expenditure for a violation or penalty for violation of any law should be mentioned here, and any other penalty should be mentioned here. But what some are doing is they are clubbing both the amounts. But what some are doing is they are clubbing both the amounts. That is point number one. Next, another mistake committed here is that late fee under section 234E is mentioned in any other penalty or fine. Actually, 234E is not a penalty or fine. It is a late fees. It is a allowable deduction that one should understand. 234E is a allowable deduction. One should understand that it is not a disallowable expenditure. It is not a disallowable expenditure. It is allowable as deduction. Right? That is clause number 21A. Now moving forward, clause number 21B. What does clause number 21B require the tax auditor to mention? In clause number 21B, you have to mention the amounts which are inadmissible under section 40A. Amounts which are inadmissible under section 40, clause A, clause IA, clause IB, etc. Here, what are the mistakes that are being committed? Clause number 40 small a, payment to non-resident is to be mentioned. And in certain other subclauses, payment to residents. Payment to non-resident where tax is not deducted or deducted but not paid. Payment to residents where tax is not deducted or deducted but not paid. These two should be populated. Now, what is the mistake that is being committed here? The mistake committed here is payee-wise details are to be given. payee-wise details are to be given. But here, some are providing the summary amounts. They are mentioning it as provision for various expenses to sundry parties. And also, the dates are not populated properly. So, in clause number 21B, you have to give details of each individual payee. Consolidated reporting should not be done. Okay. Now, what is the next mistake that is being committed? Payment to non-residents are reported in residents. Payment to residents are reported in non-residents. Now, what is the implication of such a mistake? Now, where a payment is made to non-resident without a TDS, then the rate of disallowance is 100%. Where a payment to a resident is made without TDS, the disallowance is only 30%. So, if the amounts are not populated in the correct subclause, wrong disallowance get attracted. And also, the address of the payee are not properly reported. Now, you have to also ensure that individual payee-wise details have to be given, addresses have to be given properly, the amounts to residents and a non-resident should be properly filled in the correct columns. Moving forward, clause number 21D. What does clause number 21D requires the SSC to mention? Clause number 21D, what it says is that any disallowance are deemed income in section 40A3. Now, in 40A3, where a payment is made in excess of 10,000 rupees and deduction is claimed, then you have to give the details of date of payment, nature of payment, and the name of the payee, PAN of the payee, Aadhaar of the payee. Now, here the important catch point is made by a account payee check. Now, it will not be possible for the auditor to verify each and every payment whether it is made by account payee check or not. So, what the auditor will do is he will take a representation from the SSC that all the payments are made through account payee check or draft. So, if such a declaration has been taken from the SSC, the fact that you have relied on such a declaration should be mentioned in form 3CA, 3CB. In clause 3 of 3CA, you have to mention. In clause 5 of form 3CB, you have to mention. And simply mentioning in the notes, scanning it and uploading to the income tax website will not be sufficient. Moving forward, clause number 21G. What does clause number 21G require the SSC to mention? They have to mention particulars of liability which is a contingent nature. Now here, one should understand and report only the contingent liability debited to P&L account. Only contingent liability debited to P&L account only you have to write here. You should not write all the contingent liabilities appearing in the notes of accounts. You should report should be made only when provision is created in the books of accounts. You should not mention all the contingent liabilities in the notes on account. That you should keep in mind. Coming to clause number 22. Interest under MSME Act. interest under MSME Act. You have to report the interest inadmissible, the interest which is inadmissible under section 23 of the MSME Act. Friends, where an MSME is not paid within the prescribed time limit as mentioned in the MSME Act, then such payment attracts payment of interest at a prescribed rate. The prescribed rate is also given in the MSME Act. So such payment of interest will get debited in the profit and loss account. If the interest is not yet made, a provision has to be made in the books of account for such interest. Now such interest provided or got debited in the profit and loss account is disallowed, is not allowable by way of an expenditure while computing the income under the Income Tax Act. Such a provision of disallowance is not given in the Income Tax Act. It is given in the MSME Act. That we should understand. Now, what will happen if the SSC paid the amount late, but he did not provide the interest, or he did not pay the interest, nothing got debited in the profit and loss account? Then reporting under clause 22 is not required. But if such a provision of interest is not made in the books of accounts, the financial statements will not show true and fair view. As a result of which, the auditor has to qualify his audit report. Next, clause number 23. What does clause number 23 require the auditor to mention? As per clause number 23, the tax auditor or the SSC has to mention the payments made to the specified persons as per clause 48(2). Now here, what mistakes are committed? Consolidated figures are given. It should not be like that. Let us say they have paid a remuneration to family members. 4 family members, they gave remuneration. What they are doing, they are giving a consolidated amount for all remuneration, and they are writing a single line item. And they are not giving the PAN number of the payee. It should not be like that. Here, reporting is to be made payee wise as well as nature of transaction wise. And also, PAN number should be mentioned. Definitely, PAN number should be mentioned. If Aadhaar is also available, you need to mention. Right? Next, moving forward, clause number 25. What does clause number 25 require to be reported? What is the reporting requirement of clause number 25? As per clause number 25, any amount which is chargeable as per section 41 needs to be mentioned. What does the guidance note say in this regard? Guidance note states that you need to mention this amount whether or not it is credited to the profit and loss account. Whether or not it is credited to profit and loss account, you have to mention this amount here. What TAQRB has found out is these amounts are not reported even though it is appearing in the annual report. So let us say in the earlier year, there was a fire accident and a certain stock got damaged. The loss on account of the fire accident was debited to the profit and loss account in the earlier year. They have an insurance and they have applied for a claim. That insurance claim was received during the current year. It is an amount chargeable under section 41. It has to be reported in clause 25 whether or not it is credited to profit and loss account. That we should understand. Coming to clause number 26. In clause number 26, the reporting requirement is to state whether any sale tax, GST, or any other indirect levy is passed to the profit and loss account. You have to mention here. But in certain cases, what is happening is, even though such indirect taxes are passed through the profit and loss account, instead of mentioning as yes, they are mentioning as no. It should not be done like that. It should not be done like that. Okay? Right. If they are passed through the profit and loss account, you have to mention it as yes. Moving forward, clause number 27. What does clause number 27 require, or what is the requirement, reporting requirement of clause number 27? As per clause number 27, you have to give the opening balance of SENVAT credit or ITC, credit utilized or credit availed, and the closing balance. You have to give. Apart from that, you have to give the treatment in profit or loss or accounts. You have to give. Now, what did the TAQRB found out? It found out that the calculation is not correct. Means opening balance plus availed minus utilized is equal to closing balance. Is that calculation part is not correct. That is first point. Next point, they are not giving the treatment in the profit or loss or accounts. The treatment in the profit or loss or accounts is not properly given. So you have to ensure that the treatment is properly mentioned here, and also the calculation is correct. Moving forward to clause number 31. What is the reporting requirement of clause number 31? Clause number 31 requires the auditor to mention the particulars of each loan or deposit taken in amount exceeding the limits given in 269 SS. Now here, what is happening is, some are giving consolidated figures. It should not be like that. Some are not giving the PAN number or address of the depositor. It is also not correct. Individual lender-wise details has to be given. That is point number 1. Address and permanent account number should also be given. Now, where the loan or deposit is taken by way of a check or bank draft, you have to mention whether this is by way of account pay check or draft. Now, it will not be possible for the auditor to verify each and every item whether it has been taken by account pay check or draft. So here, what will happen is, the auditor obtains a certificate or a declaration from the SSE stating that the amounts are taken by account pay check or draft. Now, then What the auditor has to do is he has to mention that in his audit report. He has to mention that in his audit report by including this paragraph which is given in the guidance note. It is not possible for us me to verify loans or deposits, etc., etc. What TAQRB is stating is some are writing this paragraph, okay, but they are not changing me or us also. So ensure that if you are including this, you have to include this paragraph. But before including it, you have to ensure that appropriate modifications are done to that paragraph. That one should understand and take care of. Next, coming to clause number 31C. What is the requirement of clause number 31C? 31C also say particulars of each loan or deposit repaid under 269C. You have to report. Here also, they are giving the repayments of time deposits which are given in the annual report. Here they are not reporting. That is point 1. Now, that paragraph which they are including, they are not modifying it properly. Now, clause number 32. What is the reporting requirement under clause number 32? Here, you have to give the details of brought forward depreciation of loss. Now, what is happening here is the date of order and the section under which the order is passed is not reported properly. One should ensure that date of order and section under which the order is passed is recorded properly. Next, here, clause number 34C, what you have to report. Where any interest is liable to be paid under section 201 1A or section 206C7, TDS and TCS. Here, what is the non-compliance that is being made? The date of payment of interest with the amount is not reported properly. So one should ensure that this reporting is made properly. Now coming to clause number 35. Clause number 35. In clause number 35, you have to give the quantity details. Means, are you a trading concern? If you are a trading concern, what you have to do? You have to give the quantity particulars. Now, what did the TAQRB found out? TAQRB found out that the assessee is a trader. How could TAQRB found out that the assessee is a trader? They could found out from the clause 10A of the Form 3CD. There they have mentioned that they are a trading concern. Let's say wholesale trader. But here, quantity details are not given. Quantity details are not given. Let us say there is a trader. He has no opening stock. He has no closing stock. But trading goods he has purchased. Trading goods he has sold. Where is the information? That information is in the financial statements. Trading sales and trading purchases are in the financial statements. Though there is no opening or closing stock. So, where there is no opening or closing stock, but there is purchase or sale, the quantity particulars need to be populated in clause number 35. That you should understand. Same is the case with quantity particulars of an SSE who is engaged in manufacturing. In clause number 35B, where the SC is a manufacturer, the quantity particulars of raw material, the quantity particulars of finished goods, the quantity particulars of byproducts, all the three are to be given. But what TAQRB has found out is they were not reported. They are not reported. What is not reported? Some are reporting partial information. They give partial information with regard to quantity purchased, quantity consumed, etc. But they did not give the percentage yield, or they did not give the shortage or excess. Now, in some cases, what happened is the quantity particulars of finished goods are given in the raw material. The quantity particulars of raw material are given in the finished goods. In some cases, what happened? The entity is a manufacturing entity, and particulars are raw materials are available in the financial statements, but they are not populated in clause 35B of the Form 3CT. So, friends, the non-compliances which have been found out by TAQRB, we should take certain safeguards to ensure that such mistakes will not be committed by the tax auditor in the coming tax audit seasons, and tax auditors will take care that they would prepare their tax audit reports keeping in view all these non-compliances, so that the quality of the tax audit reporting will improve. Next, in clause number 37, reporting requirement is with regard to whether cost audit was carried out. If cost audit was carried out, the answer to be given is yes. Now, once the answer is yes, you have to give the details of any disqualification or disagreement as identified or reported by the cost auditor. This is the reporting requirement. But what is the non-compliance that has been observed by TAQRB? Where tax audit report has been obtained and it is also uploaded along with the tax audit report, but still some are mentioning in clause 37 that the tax audit report is not applicable, means they are populating no there. It is one such mistake committed. That is one type of mistake. The other mistake what they are doing is, if tax audit is applicable, cost audit is applicable, one mistake what they are doing is, where cost audit is applicable to the entity, cost audit report has been obtained, they are attaching the cost audit report along with the tax audit report to the CBC website. But what they are writing in clause number 37, they are writing it as no. That is one mistake. The other mistake is, some are writing yes here, and in the box what they are writing is, they have obtained a representation from the management, and according to that representation, the management is stating that there is no disqualification or disagreement. It should not be done like that. Then what is to be done? The tax auditor has to obtain the cost audit report. He has to go through the disqualification or disagreement in that cost audit report. He has to copy that and paste it here. It should be done like that. Same is case with that of the excise audit also. What is happening here also? Some cases where excise audit is conducted, they are mentioning it as no. Or some are mentioning it as yes, but instead of giving the disqualification or disagreement in the excise audit report, what they are doing is they are stating that they have obtained a management representation, and that management representation states that there is no disqualification or disagreement. It should not be like that. You have to obtain that report, and the disqualification or disagreement mentioned in that report is to be copied and pasted in the clause number 38. Moving forward, clause number 40. What is the reporting requirement of clause number 40? As per clause number 40, the SSE has to give the details regarding turnover, gross profit, etc. That is a percentage, gross profit to turnover ratio, net profit to turnover ratio, stock in trade to turnover ratio, material consumed to finished goods produced ratio. You have to give. Here, as per guidance note, the details are required to be given only in respect of the details are to be given only in respect of those FSCs who are engaged in manufacturing or trading activities. In those cases, only you should give the reporting. That is one thing one should understand. So what is the second observation? Where scrap sale was made, it is not included in the turnover. Scrap sale amount should be included in turnover. The next point is net profit before tax should be taken. That is the next point. And for stock in trade to turnover ratio, how to take a stock in trade or how to arrive at the stock in trade is given in the guidance note. That is the way in which you have to arrive at the stock in trade. The manner of arriving at the stock in trade is given in the guidance note. That you should understand. Moving forward, in clause number 40 itself, material consumed should also include stores, spares, and loose stores. But some are missing on that. What some people are doing is they are leaving these ratios as blank. So it should not be like that. In respect of manufacturers and traders, thus ratios have to be filled in. In respect of a trader, you need not give the details of raw material consumed to finished goods ratio. There you have to report it as not applicable. Suppose there is a mismatch in the figures in material consumed as reported in the previous years. Then such mismatch, if it is there anything, you have to report in clause 3 of form 3CA or clause 5 of form number 3CB. But this has not been done in certain cases. So friends, these are the non-compliances which have been brought out in the publication of Taxation Audits Quality Review Board. I thought that if these non-compliances brought out in the publication are if these are kept in mind by a tax auditor while conducting the tax audit, that tax auditor will not repeat such non-compliances, thereby the quality of the tax audit reporting will improve. Thanks for watching. See you next time.